Hey, good afternoon, you folks out there, and thank you so much for joining us for class today. This is the recorded session, obviously. If you are able to make class at the prescribed times, please do. It's really important to me to be able to hear you guys and just have some connection with you. And not a bad health move for everybody. Speaking of health moves, let's kick right into our quotes that we may have missed. I'm certainly not going to go through an entire week. Here we are. Great minds must be ready not only to take opportunities, but to make them. That comes from Sunday the 26th. These are times to take advantage of the opportunities that are presented to us because of all this time on our hands. I hope you're doing that. April 27th, Monday, the spirit, the will to win, and the will to excel are the things that endure. These qualities are so much more important than the events that occur. Well, I tell you what, the events of today are pretty extraordinary, but we should be able to take from them the idea of the spirit, the will to win, and the will to excel. Have a really positive attitude if we can keep it. April 28th, that's Tuesday today. And there are 4 steps to accomplishment. Plan purposefully, prepare prayerfully, proceed positively, and pursue persistently. Man, that's an awful lot of P's in there. I like to simply say, pursue passionately your purpose. And we got some things to think about, and why don't we sit back, relax, and take a little bit of time for Fable
5. Fly with Abel and Phi. Body scan meditation for students. Sit straight on your chairs and bring attention to your body. Close your eyes if that's comfortable for you. You can notice your body seated, feeling the weight of your body on the chair. Take a few deep breaths. Breathe in, 1, 2, 3. Breathe out, 3, 2, 1. Notice your feet on the floor. Notice the sensations of your feet touching the floor. Is it heavy or light? Cold or warm? Notice your legs against the chair. Again, you can feel any pressure or pulsations or lightness. It is okay if you do not notice anything at all. Just observe without judgment. Now, notice your back against the chair and look for sensations, if at all. Bring your attention into your stomach area. If your stomach is tense or tight, soften it. Take a breath. Breathe in, 1, 2, 3, and breathe out, 3, 2, 1. Notice your hands. Are your hands tense or tight? Let them be softened. Notice your arms and shoulders and feel any sensation there. Notice your neck and throat. Let them be soft. Relax. Observe your face and soften your jaw. Let your face and facial muscles be soft. Then notice your whole body present. Take one more breath. Be aware of your whole body as best you can. Take a breath. And then, when you're ready, you can open your eyes.
I don't know about you, but I tell you, I really do like Fable Fine, what she does for me. And the chance I get to do this often with you guys is cool. So, today's agenda, please make certain that you have open Google Classroom. Before I get started, you all are aware of the announcement that was put out by North Carolina Department of Public Instruction last week. I believe it was on Thursday. And Wake County is waiting to develop a plan in terms of how to roll this out and how to implement it. For those of you who may not have seen it, they have added the option for students to select a numerical grade that will be calculated in your GPA, as well as just a pass. If you choose pass, then you will not have any numerical grade or the credit calculated in your GPA. You will receive credit for the course, but it will not be reflected in your GPA. That announcement from Wake County is meant to come out later this week. When we meet again on Thursday, I may know more about it. If you have questions concerning that policy and the implementation of it, I would strongly encourage you to contact your guidance counselor and student services. They should know the most about it. So, in Google Classroom, I have a couple of one SEL component for you, and that is this here called Creativity. And if you look in there, there are a couple of videos. Combined, they're about 30 minutes. As you see, this one is 19 and this one is 10. I do have an assignment over there for you that is called What Creativity Means to You. Please do not just answer the questions. Okay, please take the questions and these bullet points as prompts for you to think about and for you to write about. I've had down here the assignment, which is to write a well-structured essay to what creativity means to you, using those prompts and things to help you respond. When I say an essay, I don't need it full-blown, 3 paragraphs or whatever, but I would like a couple of paragraphs from you, a total of about 8 to 10 sentences. If you watch only one video, have it be this Embrace the Shake. It's 10 minutes. There is some incredible artwork in there, and it truly is an inspiring story. If you get to watch both of them and you've got the time, which we know we do, go for it. So that's it on SEL. I got 2 things here that I have created a new topic for, and that is money management. But before we get into those, I have a couple of questions for you. I'm going to give you a PowerPoint. We would have had a discussion if you were here, but I'll just breeze through this. First, think about how do you measure wealth? What does wealth mean to you? What does it mean to be rich? What does it mean to have a net worth? In our discussions in the live class sessions, a lot of people were saying the amount of money you have, the amount of stuff you have, the number of things you own, the number of assets you have, the strength of your investments. Traditionally speaking, we often take a look at wealth being just an accumulation of stuff. And we look at somebody that has a nice house and all kinds of cars and televisions and surround sound theater systems and all this, and we think, wow, they must be rich. Maybe not. We're going to discover today, what does it mean to be wealthy and what does it mean to be rich? What does net worth mean? And does it mean just having a bunch of stuff? To start off, we're going to take a look at Ian and Mitchell, and would like for you to think about who is wealthier here, Ian or Mitchell. These are their incomes. Ian makes $30,000 a year. Mitchell makes $85,000 a year. Take a moment and think to yourself, based upon just this knowledge, who is wealthier? Most of us, of course, would say Mitchell. He makes more than twice as much as Ian. This is Ian's net worth. This is Mitchell's net worth. You can see from this that based upon the measurement of net worth, actually Ian is better off than is Mitchell. So let's learn how to answer the question, why is this the case? What's happened here? First off, net worth is the measure of financial wealth. I mentioned that already. And wealth is the monetary value of all your possessions that you own, minus the amounts that you owe to others. That is net worth versus wealth. This is net worth versus income, right? Net worth and how rich you are is going to depend upon how well you manage your income. Income is, as we know, the money that is received as wages earned from working for pay, which is different from net worth. Net worth is how well do we manage that income. You can have high income and a low net worth, and vice versa, just as we saw with Ian and Mitchell. So how do you determine what your net worth is? And it's not just the accumulation of stuff. And we saw earlier it put into words monetary value of all your possessions that you own versus all the amounts of money that you owe to others. How can we get there? This is a statement of financial position. I like to call it a personal balance sheet. There are three components, as you can see, to a statement of financial position. The assets are all listed on the top. Liabilities are down on the bottom. Net worth and how it's calculated is all the way at the very bottom. Your total assets, which you've listed here, minus your total liabilities, which you have listed here, will equal your net worth. So think to yourself for a moment, what is an asset? Think of what we've already gone over in this PowerPoint, and perhaps what you may have already heard in dining room table discussions or in other classes. What is an asset? An asset is everything a person owns with monetary value. Cash is obviously a big one. And the value of your personal possessions. Right? So we can consider the amounts that you have in checking accounts and savings accounts as cash. As tangible assets are those things which you can actually touch: books, jewelry, watches, furniture, televisions, etc. Please note, though, that these are the market value of these things. It is not what you paid for them. What you paid for them is going to be much more than what the market value is for them. As soon as you took the tag off of that new shirt or opened up that new television and started playing it, it lost its value. These are what we call depreciable assets, meaning that they shrink in value. The market value of a home, though, is different. You hope to have that be increasing over time. What are liabilities? Well, if assets are all of those things that you own, what might you think liabilities are? You guessed it. It is all of those things that you owe to others, that you have an obligation to pay for. A debt or an obligation. Those things can be loans, like mortgages, which is a loan out on a house or your property. You have automobile loans, student loans. Don't forget about credit cards, and these are the killer. These can reduce your net worth drastically and really keep you from meeting your financial goals. So how you calculate net worth is once you have all of the assets summed up, you have all the liabilities summed up, you subtract the liabilities from the assets. What's left over is net worth. Now think for a moment, do you hope to have a high net worth or a low net worth? Do you wish for it to be positive or negative? I think the answer is pretty clear. This is oftentimes thought of as your personal thermometer. If you take your temperature, that is the temperature of your body at that time. If you take a snapshot and you do this exercise, that is a snapshot of your financial wealth at that time. Think for a moment how, if you take a look at the mathematical formula, what can you do to increase your net worth? Recall that you are subtracting total liabilities from total assets. The first thing is rather obvious. You can increase the amount of assets that you have. Let me point something out here, though. One is that if you take cash on hand or you use your checking account to pay for an asset, you have just reduced your cash and increased that other asset's value, electronics or shoes or whatever it might be. So you're really not doing yourself any favors by spending cash to get more stuff. The one area that is of significance where you can increase your assets are in investments. Before you even have your paycheck received, use that 401k, get 10, 15, 20% of your income into investment assets. The other way, obviously, that you can increase your net worth is through reducing your liabilities. Take advantage of paying an extra payment on your house, maybe rounding up to the nearest $10 for your automobile loan. Right? Keep your credit card balances at zero if you can. If you can't afford to pay off a credit card bill when you receive that bill, something's wrong. Ultimately, you are evaluating how well you manage your money. These are the 3 money management tools. We're going to be going over 2 of them specifically in this class, not today, right now, but over the next week or so. Right? What is my financial position today, right now? That is your statement of financial position or your personal balance sheet. The other one we're going to be spending time on that we've actually already started is our spending plan or our personal monthly budget. What am I going to do in the future in terms of how I spend my money? An income and expense statement we won't spend as much time on. Essentially what that is telling you is how am I spending my income in the past? And you record how you spend your money. Right? These are obviously linked together and we need to be cognizant of all of them and know how to use all of them so that we can get to our desired net worth. I want you to think about the decisions that you can make today with regards to your net worth that are going to have an impact on your future? Ask yourself, what could I decide today that may have a positive impact on the future? Well, one thing you might be able to do is let's save more money. Put money into a savings account. Another thing that you can do today is invest in your education, because that's going to give you perhaps higher earnings in the future, make your human capital more valuable. Negative decisions that you can do today is, let's go ahead and buy that new app. Let's do that in-game purchase on Microsoft instead of saving our money. It's going to affect the future because we may not have money that we wish to spend on something we need then in the future. And it can also affect our future because we chose not to save it. Instead, we spent it. There's a trade-off. There's an opportunity cost there that affects your future. Always keep in mind the goal of being richer. Not rich per se, but being richer when you're making those spending decisions. So let's go back to Ian and Mitchell and analyze this to help you determine how it is that Ian has higher net worth than does Mitchell, who earns more than twice as much as Ian does. Well, first off, take a look at the home. There's a $40,000 more that Mitchell's home is worth than is Ian's. But check this out. If you go down to the liabilities, 80% or $80,000 of the value of the home for Mitchell is actually on a loan. He doesn't own the house at all. The bank owns 80% of it. Over here, however, the loan is much smaller for Ian. He owns 2/3 of his house. I'm sorry, the bank owns 2/3 of his house, and he owns 1/3 of it. Another thing to point out here is that Mitchell has greater savings than does Ian by a couple of $1,000s. But interesting here, this couple of $1,000 difference is made up for on Mitchell's liability side. If he were smart, he might take $2,000 from his savings and pay off those credit card balances. That interest will kill him. One thing also that Ian is doing, I think, better than Mitchell is they both may have $20,000 saved in retirement. However, if Mitchell's earning so much more money than is Ian, why isn't he putting more money toward retirement? Another thing that you can see here is the difference in the value of their cars. While Ian might have a car that is $10,000 less in value than Mitchell's, look at where that $10,000 is for Mitchell. It's in the form of a loan, whereas over here, Ian doesn't have an automobile loan nor any credit card debt. So when you do the math, you can see that, hey, he may not have as big of a house, he may not have as cool of a car, but he doesn't have any credit card debt, and he doesn't have an automobile loan. Hence, he is richer, which kind of goes to prove the point that being rich is not just accumulating a bunch of stuff. Because if with that stuff comes a bunch of debt, you're not any richer. You just have a bunch of depreciable assets. You should always have a statement of financial position completed. Once a year is great, once every 6 months. I, for one, do mine once a year. There are also those times, though, that you're going to want to do it when, say, you're making a large purchase decision, such as an automobile, or, God, even some of these televisions these days are way too expensive. But anyway, or you want to do a new house. Well, you're going to have to do the exercise for a new house loan anyways, so you might as well have it ready to go. In summary, today we talked about the calculation for net worth, the fact that net worth is an objective measure of wealth as opposed to subjective. Subjective being, look at all the stuff he's got, he must be rich. Well, the objective measure is actually doing the math. and it is a financial thermometer, if you will, a snapshot of your financial position today. Also, keep in mind, decrease your liabilities in order to have high net worth. Don't buy something if you can't afford it. If it's going to sit on a credit card, those new pair of shoes or something, don't do it. Alrighty, let's bounce out of this for now and back to, if you will, the Google Classroom. Told you that there are 2 assignments under money management. The first one is this. There are 2. Oh, where'd that go? Didn't mean to do that. What's happening? I'm sorry. There's the PowerPoint that I just went over. That's available for you to take a look at there. Definitely do the reading. Make certain that you understand what all the different types of assets are, different types of liabilities, and what we just talked about. Get a better understanding of that. If you wish, you can do the Statement of Financial Position Note-Taking Guide, which will be available to you, just not to me right now. You don't have to do that if you're not into learning guides and note-taking guides. Do that first, the reading and the PowerPoint, if you wish. Then you're going to get into the assignment called Tori's Net Worth. This is where you're going to have an opportunity to exercise your money management tools and help out Tori. Tori has a need to, or she thinks she has a need, to buy a new car. There's all the information that you need to fill in her current financial position. You are going to be answering these questions using this spreadsheet once you get all this information figured out. Be careful, though, when dropping these numbers into that sheet that it's relevant. Right? As an example, it says here, invests $20 per month into a retirement account that is currently worth $500. The $500 is definitely relevant, and that goes into your personal balance sheet. However, the $20 per month that she spends or puts in there is an expense to her and does not go into your statement of financial position. If you don't want to print this out and fill it in by hand, or you don't have the capabilities of Adobe Fill-In on Acrobat, there is, at the very top of the stream here, a statement of financial position spreadsheet. If you prefer working with Google Sheets, you can just type these numbers in here, like so. Right? But before you do that, as you know, please make certain that you make a copy of it for yourself. File, make a copy. When this window pops up, you put this into your financial toolbox, which is under your personal finance folder. Once you have that all set up, you click on OK, which I'm not going to do because I don't want another copy of it. And you will then have opened up your own sheet. You might want to make another copy of this, and perhaps you want to use it at home. A wonderful way to learn is by explaining to others what something is. So maybe you take it to your parents and say, hey, can we have a money conversation? And I talk to you about figuring out our net worth. Do be careful, though, because in some households, talking about money can be a little sensitive. But it's worth a try. Help you with your learning, and perhaps at the same time, help your parents learn something. So do the reading, then help out Tori. On Thursday, we will get together in class and go over Tori's decision on the purchase of a new car. Cool? Cool. All right, 3 things we did today. We got ourselves centered with Fable-Fi and a deep body scan and some good breathing. I showed to you the creativity videos and the SEL assignment out there. That is optional. Tackle it if you want to. We spent our significant amount of time today talking about our personal balance sheet, or net worth, or that statement of financial position. It's a lot of syllables, man. That's why I just call it personal balance sheet or personal net worth. Right? Assignments, get those done before you come to class on Thursday. Shoot me some emails if you have any questions. Be happy to respond. In the meantime, get out there and rock that world, baby. But keep 6 feet apart. Adios.